Hello. Now let's see section 20, that is manner of distribution of credit by input service distributor. This is a very simple concept, though it may seem to be lengthy in language, but it is very simple to understand. What happens is that I'll explain it to you first. If a person has separate registrations, okay, like Farooq Haque classes. So Farooq Haque classes head office may be situated in Mumbai, okay, and I may have different branches across India. So one FHC is in Delhi, then there is Farooq Haque classes in Chennai, then there is Farooq Haque classes in Hyderabad, and so on and so forth. I may have several premises. Problem arises when input services are received. The beneficiary of the input service are these premises, maybe one or maybe all of them, or maybe two of them, some of them, one, some of them, or all of them. The beneficiary of the services can be these premises. Okay, either one or some or all. But the bill, the invoice comes at the head office level. Now head office might itself also be a registered person. It is also giving some service or supply of goods as the case may be. So it is also liable to pay tax, and all of these premises are also liable to pay tax. Or it can only be that head office is not liable, it is just the head office, it is a registered office. No supplies made from here, but supplies are made only from our branches. So either or, there can be several complexities. Now the question is that since the beneficiaries are these premises, invoice comes here, who will take the credit? The FHC head office will take full credit of the tax paid here. Suppose the GST paid here is 15,000. So the question is, who will take this credit? One question. So here the section says, section 20 as we'll see, and the rules in relation to section 20, that this head office can get itself registered as an input service distributor. So this will be registered as an ISD, input service distributor, and when it is so registered, then it can transfer this credit amongst the units, depending upon who are the beneficiaries. If the beneficiary is only one unit, it will be given to this unit alone. If the beneficiaries are 2 units, it will be distributed amongst them. If the beneficiaries are all of the units, then it will be distributed amongst all the units. Okay, so distribution will be done according to the proportion of the benefits derived. So this is called as the distribution of credit. So credit will be distributed amongst the constituent units. In which proportion? That all we are going to see. The nitty-gritties we'll see in the section and the rules. But the concept you must understand first. So it is about distribution of credit. So we'll see how it is to be distributed, the ratio of distribution. That is one point you have to focus on. Number 2, which tax? I mean to say that if the original tax, this GST, is CGST and SGST, then how will it be distributed? When it is distributed to these units, will it be distributed in the same form, that is CGST as CGST, CGST as SG as SG, IG as IG, or it will be converted into some other form and then distributed? So the manner of distribution, the which tax means distributed the same or in another form, in same form or other form. Okay, so these are the two aspects that we will discuss in detail, and then lot of procedural parts will be there, how the invoice will be made, how much amount will be written, what are the contents of the invoice, and so on and so forth. Okay, so let's see. Section 20. The input service distributor shall distribute the credit of central tax as central tax or integrated tax. Now see, the very first point is about the manner of distribution. So if the credit is of CT, the CT can be distributed as CT or integrated tax, and integrated tax as integrated tax or central tax. So IG credit can be distributed further as IG or as CT. By way of issue of a document means the invoice of input service distributor, containing the amount of input tax credit being distributed in such manner as may be prescribed. So as may be prescribed means again as per the rule. So the contents of the invoice will be as per the rules, prescribed contents. So here you remember one thing, CT will be distributed as CT or IT, and IT can be distributed again as IT or even CT. So you can convert IT into CT, but this is given in the section, but it is not practically done. If IT is there, it will be distributed as IT only. Then the input service distributor may distribute the credit subject to following conditions. Lot of conditions are there. Number 1, the credit can be distributed to recipients of credit against a document containing such details as may be prescribed. So first condition is the document, that is invoice. Invoice has to be issued. ISD will issue an invoice to its units. Number 2, the amount of credit distributed shall not exceed the amount of credit available for distribution, obviously. If the original invoice that has been received at head office is say GST 15,000, then my distribution should also be aggregating 15,000 only. It cannot be 10,000 distributed here, 10,000 there, 10,000 there, 10,000 there. How can it happen? If I have got 15,000, I cannot distribute more than 15,000 in the aggregate, obviously. Then the credit of tax paid on input services attributable to recipient of credit shall be distributed only to that recipient. So this talks about the beneficiary. So if it is only for one recipient, means if the benefits of the service has been received only by one recipient, but the invoice is received at head office, then that credit will be distributed only to that recipient and no one else. Then the credit of tax paid on input service attributable to more than one recipient, means more than one beneficiaries are there of the service of credit, shall be distributed among such recipients to whom the input service is attributable, means beneficiaries, and such distribution shall be pro rata, means proportionate, on the basis of turnover in a state or union territory of such recipients during the relevant period to the aggregate of the turnover of all such recipients to whom such service is attributable and which are operational in the current year during the said relevant period. Very simple point. Say if the benefits are derived by 2 units, so we will take the turnover of both of them and then we will segregate the credit in the proportion of their turnover. If the turnover of unit 1 was 50 lakhs and turnover of unit 2 was 75 lakhs, so total is 125. So distribution will be 50 upon 125 and 75 upon 125. So simple. All of you know how to do it. Proportion is very simple. And the credit of tax paid on input services attributable to all the recipients, if it is for all, everyone. So it can be one, it can be some, it can be all. One, some means some of them, not all of them, but some of them, or all of them. 3 different positions can be there. Shall be distributed among such recipients, and such distribution shall be again pro rata on the basis of turnover in a state or UT for that month. So it is dependent upon month in which we are distributing. So turnovers will be of that month divided by aggregate turnover of all the units which are operational, obviously. And the explanation says relevant period means what? if the recipients of credit have turnover in their states or union territories in the financial year preceding the year during which the credit is to be distributed, this said financial year. Now see, this is an important point, that this is financial year say 1920, and this is month of April. A stands for April, and we have to distribute in this month the credits. So which turnover will we take? We will take turnover of the preceding financial year, PFY. So we'll take unit 1, unit 2, 3, 4, whatever units are there. We will take turnovers of the preceding financial year if these units were in existence in the said financial year. So this April month's distribution will be done on the basis of turnovers of the last financial year, the preceding financial year. Okay, so that is the relevant period. But if there was no operation in the last financial year, or some of the units were not operating, which are operating in the current year but not operating then in the last year, then we will have to take the quarter preceding the distribution. So let's see. So first point says, if the recipients of credit have turnover, recipients of credit means I have to distribute in 4 units, unit 1, 2, 3, 4, and if all 4 of them were existing in the preceding financial year, the recipients of the credit have turnover in their respective states or union territories in the financial year preceding the year in which the credit is to be distributed, then the said financial year. So if all these 4 units were operational in the preceding year and they have turnover in their respective states, then that will become the base for distribution here. This turnover will be the base for distribution for the month of April, as well as May, as well as June, and up to March. So whatever month we are distributing, the ratio will be taken as the turnovers of the preceding financial year. And if some or all the recipients of credit do not have any turnover in their states or union territory in the financial year preceding the year during which credit is to be distributed, the last quarter for which the details of such turnover of all the recipients are available previous to the month during which the credit is to be distributed. Means in this case what we'll do, if this is the current year, current financial year, and the distribution is to be done for the month of, now suppose we don't have, last financial year we don't have any turnover. Either one unit doesn't have turnover, or all of them do not have turnover, or some of them do not have turnover. Then we will take the quarter. So suppose April, May, June quarter, you have all the 4 units operational. 4 units are operational and we have got the turnover. So April, May, June quarter, you have turnover, right? So the next month, that is for the month April, May, June, so for July, if the distribution is to be done, you will use this turnover as the base. So this turnover of this quarter will be used as a base for distribution in the month of July, and then August and September. Okay. The last quarter for which the turnovers are available, that will become the base. Got it? Simple. And then in this year, as we'll have turnover of all the 4 units, so for the next year we will use the turnovers of this year. Then the rules are given. Procedure for distribution. Now the whole procedure is given. You have to just remember a few things out of this, not the complete details. An input service distributor shall distribute input tax credit in the manner and subject to following conditions, namely, the input tax credit available for distribution in a month shall be distributed in the same month. First important point, has to be distributed in the same month only. Means credit of April will be distributed in April only. And the details thereof shall be furnished in Form GSTR 6 in accordance with provisions of Chapter 8. That you forget. Even the form number you can forget. But you have to remember, distribution has to be done in the same month. Then input service distributor shall, in accordance with the provisions of clause D, separately distribute the amount of ineligible input tax credit. Ineligible means the blocked credits. So blocked credits will also be done in the same proportions, which will ultimately be blocked. So they cannot be taken there. But what it means is that you cannot do like the eligible you distribute to one unit and the non-eligible you distribute to another unit. It should not be like that. All the types of credits will be distributed in the same proportion, including the ineligible. And the amount of eligible input tax credit. So the ineligible ones and the eligible ones both have to be distributed in the same proportion. Then the input tax credit on account of central tax, state tax, union territory tax and integrated tax shall be distributed separately. Okay, in accordance with the provisions of clause D. And now clause D, the important one. The input tax credit that is required to be distributed in accordance with the provisions of D and E of 2 of 20 to one of the recipients R1, whether registered or not, from amongst the total of all the recipients to whom the input tax credit is attributable, including the recipients who are engaged in making exempt supplies or otherwise not a registered person, shall be amount C1 to be calculated by applying the following formula. Forget the whole English, it only refers to the formula. So what is the formula? Means credit to be distributed to one unit. That unit may be producing taxable goods, that unit may be producing exempt goods, it may be registered unit, it may be unregistered unit. Whatever that unit is R1, and the distribution will be C1, which will be calculated as follows. The formula is C1 is equal to T1 divided by T into C, where C is the amount of credit to be distributed. So C is the total credit that you have to distribute. T1 is the turnover as referred to in section 20 of R1, means turnover of that unit during the relevant period, and T, capital T, is the aggregate turnover of all the units to whom the credit is to be distributed. So turnover of that unit divided by total turnover into C. Very simple formula. Then the input tax credit on account of integrated tax shall be distributed as input tax credit of integrated tax to every recipient. Now see, here is the conflict. The section says that integrated tax can be distributed as integrated or central, but the rule says that IT should be distributed as IT only. Understood? So integrated tax will be distributed as integrated tax only. Now you may argue here that the rule cannot override the section. That's true. The rule cannot override the section, but this is procedure. So yeah, you can distribute it as CT, but practically it is not. Then the input tax credit on account of central and state tax or union territory tax shall, in respect of a recipient located in the same state or UT in which the input tax distributor is located, means if the ISD and the person to whom we are distributing are in the same state, be distributed as central, state or UT respectively. Means the nature will not change. The nature will remain same if both of them are in the same state. Second, in respect of recipient located in a state or union territory other than the input service distributor, means both of them are in different states, then be distributed as integrated tax. It will be converted into integrated tax, and the amount to be so distributed shall be equal to aggregate of the input tax of central and state or union territory. So it will be aggregated, the CT and ST will be aggregated and distributed as IT, integrated tax. Because if it is distributed as central or state, the other state will not allow the credit. This we have discussed earlier also. One state's CT and ST cannot be allowed as credit by the other state. So hence it will be distributed as IT, integrated tax. Then the input service distributor shall issue an input distributor invoice as prescribed in rule 54, sub rule 1, clearly indicating in such invoice that it is issued only for distribution of input tax credit. So this is not a normal supply invoice, this is a distribution invoice. And so, the input service distributor shall issue an input service distributor credit note. This is about credit note. So first, if invoice is received, we'll distribute it. Later on, if the original supplier gives us an additional invoice regarding additional tax, then we have to distribute that also. Or, so for that we'll issue a debit note, and if a credit note is issued when the tax is reduced. So if the original supplier reduces the amount of tax, then he gives us a credit note to the head office. That credit note will again be distributed amongst the units, and these units will have to reduce that much tax. Similarly, if additional tax is forwarded to us, we'll issue it by way of debit note to our constituent units. So if there is a reduction, we'll give credit notes. If there is addition, we'll give debit notes and further distribute the credit. So this accounting will keep going on. So this is about credit note for reduction of credit. So for reduction of credit, there will be credit note of the tax which has already been distributed. And if additional tax comes, then a debit note will be issued. So next point is debit note, subject to provisions of earlier clauses. And last point says J, that any input tax credit required to be reduced on account of issuance of credit note to the ISD by supplier shall be apportioned to each recipient in the same ratio in which the input tax credit was originally distributed, obviously. And the amounts of apportion shall be reduced from the amount to be distributed in the month in which the credit note is included in the return in GST 6, or added to the output tax liability of the recipient where the amounts of apportioned is in negative by virtue of the amount of credit under distribution being less than the amount to be adjusted, obviously. So either they will reduce the the units who get the credit note. If they have balance in their electronic credit ledger, they will adjust it there. If there is no balance, then they will have to add it to output tax liability. Means they will have to debit it to electronic cash ledger in that case. And if the amount of input tax credit distributed by ISD is reduced later on for any reason for any of the recipients, including that it was distributed to a wrong recipient by the input service distributor, the process specified in clause J, this above process, shall mutatis mutandis be applied for reduction of credit. So if it was wrongly distributed to one unit, it shouldn't have been distributed there. Then we'll issue debit and credit notes correspondingly. Means I'll issue credit note to unit 1 and take back the credit, so they will reduce it, and then I'll issue a debit note to unit number 2 who can avail the credit. So head office will have to do simultaneously two things. The one to whom we have wrongly distributed, we'll have to get it back, so we'll issue a credit note there. They will reduce the credit, and we'll issue a corresponding debit note to unit 2 for further availing of the credit. And subject to provisions of subrule 2, the input distributor shall, on the basis of input service distributor credit note specified in H, issue an input service distributor invoice to the recipient entitled to such credit, as I told you, and include the input service distributor credit note and invoice in the return in GSTR 6 for the month in which such adjustment is done. Very simple points, and then the analysis is given, which is the same thing, so you have to read it once. All simple points with examples. And how that adjustment is also done, the turnovers and all. So there's an example there also. This is a good example. This you have to read once very carefully. the different invoices are given and who are the beneficiaries of these invoices. So in some cases only one beneficiary, in some cases some of them, and in some case all of them. So the distribution will be done on the basis of the proportionate turnover, the proportion of turnover in the last financial year. And if CGST is there and if it is in the same state, it will go as CGSG. If the state changes, then it will go as IG. So that whole example is given there. Very interesting example. You must read it very carefully. Okay, let me explain this example to you. Let's see. I'll explain the logic here and then it is given in the answer. Invoice A. Okay, let's see above. Yoko Infotech Limited has its head office in Mumbai. So Mumbai means Maharashtra. So head office is in Maharashtra, for which it additionally has an ISD registration. Very good. The company has 12 units, my God, across India, including its head office. So one of the beneficiaries head office also, and 11 other units. It receives the following invoices in the name of ISD at Mumbai for the month of January 18. Invoice A. Now see, 1 lakh IGST is there. So in the input invoice, if there is IGST, then in my distribution invoices, it will also go as IGST. IGST remains as IGST. Issued by Peace Link Technologies, registered in Uttar Pradesh, for repairs executed in 3 units. So this is for some of the units, some, few. Bangalore, Kolkata and Gurgaon. Note, Gurgaon location is not registered as it is engaged in making only exempt supplies. That doesn't make a difference. You have to distribute accordingly to all the 3 of them. So here the distribution will be amongst these 3 units in the proportion. So see the answer. Bangalore, Kolkata and Gurgaon. The turnovers are given. Bangalore 2 crores, 1 crore and 2 crores. So total 5 crores. So this credit of 18,000 IGST will go in the same proportion. And IG will remain IG, IG, IG. So it will remain as IGST and it will be distributed in this proportion. Now since this unit is making exempt goods, it will not be entitled to take any credit. So they will not get credit, but these 2 units can avail the credit. Understood? Simple. But distribution has to be done. You cannot say that, oh, that unit is making exempt goods, so it will not be entitled for credit, so let's not distribute there. So we'll distribute the whole credit among the 2 units which are entitled for taking credit. That cannot be done because that unit is also beneficiary. The Gurgaon unit is a beneficiary. It has used the service. So you have to distribute accordingly. You cannot do tax planning in distribution. Okay. Then let's see second invoice. Invoice B. Invoice B is a local invoice. So it has CGST and SGST. Issued by Messrs. Tech Force, registered in Pune, for repairs executed in 3 units, Mumbai, Bangalore and Kolkata. Now see, this is interesting one. So first we'll take the turnover of these 3 units and then distribute. That part is simple. You know the turnover, you will distribute it. How will it be distributed becomes important. So CGST, SGST is there. When it is distributed to the Mumbai unit itself, it will be distributed as CG or SG. So for Mumbai it will remain C and S. But for Bangalore, that is in a different state, and Kolkata, it will become IG, IG. And this IG will be total of CG and SG. Okay, so let's see the second invoice, invoice B. Turnovers are given. You can find out the proportion. 27,000 is the CGST and 27,000 SGST. CG, SG. Now when this will be distributed to Mumbai unit, it will remain CG. So I think this is the Mumbai unit. Yeah, this is the Mumbai unit, the third one. So for Mumbai unit it will remain CG, SG, CG and SG. But For these two units, as they are in different states, it will become IG. So SG will be distributed as IG, CG will also be distributed as IG. So here you will have to take this total. So for this unit, total will become 27,000 IG, and here it will be 13,500 IG. Okay. Then coming back, invoice number 3. Invoice 3 means C, 5 lakhs. And IGST is there 90,000, issued by Messrs. Georgia Marketing in Bangalore for making services for the company as a whole. Oh ho ho, this is company as a whole. So now we'll distribute among all the 12 units. All the 12 units in the ratio of their turnover in the preceding financial year. And since it is IG, it will remain IG. IG remains IG. And the last one is 10,000 CGST, SGST is there, issued by Messrs. Gopal Coffee Works, registered in Mumbai, for supply of beverages during the month of to its Mumbai unit. This is one. Service for one. So this will remain distributable only to one unit, that is Mumbai unit. It will not be distributed to any other unit. Very simple examples. And the turnovers are given, which we will use for distribution. So that is a simple example, and you can read the notes. And then it is further given that how the thing is to be distributed. Like ISD is in Gujarat. So if it is the same state, the recipient is in the same state, then it will have the same character. CT will remain CT, state will remain state, union territory will remain union territory, and integrated will remain integrated. And if they are in different states, then CGST will be distributed as IGST, IGST will be distributed as IGST, and SGST will also be distributed as IGST. So very simple examples, and the final conclusive example is also there. So in different states, then CG, SG, IG all will be distributed as IGST, but in the same state they will retain the same characters. Very simple. Great. So these were the sections relevant to the input tax credit, right from section 16 to section 20, along with their respective rules. Now in the next lecture we'll see section 41, 42, 43. These are basically in relation to the returns, how the matching process is done. Supplier's return and the recipient's return have to be matched on the portal. Unless they match, the credit is not allowed. So this is, you can call as the security system, so that people cannot misuse the credits. Okay, so this we'll discuss in the